Good morning, traders. It's 8:01 a.m. Chicago time on Friday, non-farm payroll, unemployment Friday, the 3rd of June, 2022. This is episode number 2246. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Popping on over to our convergent trading pre-market summary sheet. The risk sentiment right now is mild risk off, although the NASDAQ is really responding to this unemployment release. Essentially, the expectation that seeing that the economy is still pretty hot. Just a quick recap. Of course, all of you can get this information. The U.S. unemployment rate came in at 3.6%, a little bit hotter than the expected 3.5% rate. The prior is 3.6%. And the average earnings year on year, which is a key number here for inflation, came in line at 5.2% versus the prior 5.5% U.S. average earnings increase. Was 5.5, 5.2. The market likes that. This is where we saw a little pop. The non-farm payrolls number, the headline, is 390,000, beating the 325,000 expected, even though May was anticipated to be softer anyway because the prior is 428,000, which was revised to 436,000. So we went from 436 to 390,000. Indicating a bit of a slowdown there. However, the way the treasuries moved basically give us a bit of an indication that maybe the cooling off is not cooling off enough. There's an anticipated 50 basis point rise or increase in the next couple meetings, bringing us to over 2%. Nobody knows where the neutral rate is, but that's what the market's really sensitive to. So mild risk-on sentiment coming into today. Most indices are trading within yesterday's range. Nothing really special there. Some Asian and European markets are closed today. And the news flow is pretty quiet unless, of course, you consider the huge attention that's being given to Elon Musk's feeling that the economy is running too hot and is in trouble, and he's cutting 10% of considering cutting 10% of Tesla's workforce and putting on a hiring freeze. I don't know. This guy is becoming a bit of a clown as far as I'm concerned. Just always running to the media. In any case, he's become an economist now, or not an economist, but an analyst. But in any case, this morning, we did get balanced trade out of Germany. Came in at 1.3 billion, very disappointing, versus plus 7.3 billion euros. That caused a little bloop down. And then we got a bunch of numbers, the global services PMIs for France, Germany, the Eurozone. And then we had unemployment for the U.S. And what we have left is ISM non-manufacturing. That is the ISM services PMI, which is a fairly significant number. And then Fed's Brainard is going to talk at 10:30. So 10 and 10:30, pretty important releases at that time. So be aware. Looking across the board, I mean, it's really it's very clear that we are just pulling back a little bit. We had quite a rally yesterday. We definitely had more range and climbed quite a bit, much more than I expected. I'll go over that in a minute. Gold remains in the 1850, 1860 range. Crude oil taking a bit of a pop higher to 117. Crude oil is not giving up any territory at all. And then Bitcoin and Ether remain in a choppy range. Looking at the S&P, 248,000 contracts have traded. We have 58 points of range already. We have range being outside of one standard deviation, which is highlighted down here at 47 points. It's above that. So pretty active session and overnight multi-distribution profile. Expecting that activity to continue in today's session, and the volume is likely to push towards 300,000 before the open. The first standard deviation of volume before the open is 290,000. So expecting this session to be relatively active early on, likely to die out pretty quickly into the 12 o'clock New York time kind of hour. Nothing special about today. So, Monday's a regular day and so on. Let's take a look at what was expected yesterday as part of our review segment. Yesterday really was looking for the market to dip down. I didn't expect too much of a push. Expected it to dip down to around 90, potentially testing the overnight low at 83.5, but overall was looking for it to push to 47, being the key target on a rally. The secondary is if we get an early push that fails, right in here, that fails to continue, and we get an impulse down, that little arrow, then I was looking for 50 as a key target on the downside. That did not happen. We actually had a pretty good push down. We ended up pushing a fair amount, and then we had a really big push up. We took out the prior day's high, in what basically is a consolidation pattern. So if we look at what we've got here, let's look at the overall picture. So we have been in this kind of, we gapped up, we left a gap behind here, we closed that gap right here, and we've been in this consolidation zone now for a bit of time. And then yesterday it came in and put a higher low, a slightly higher low, and it finished very bullish. So the anticipation is it's likely to continue to move towards the 4,200. This zone here that you see on the chart, these little zones here, why don't you guess what those are? What do you think those are? Those zones that are being shown there. So, looked like, if you recall, I talked about getting over 40.15 right here. And if we're able to take and hold the 4,100, then 4,200, 4,220 are very likely. 4,220 right here, the top of this zone. And yes, those zones are single prints. Single prints are poorly auctioned areas that the market is very likely to revisit. So you see these single prints here left behind. On this day, we came in and filled some of them on the 26th, and then we came in and filled the rest on the 27th. We generally go back and check those single prints. But yesterday's close, which introduced new single prints right there and there, yesterday's close was very bullish, very bullish. The morning was incredibly choppy. We'll look at that in a minute. The morning was incredibly choppy, and then we finished very strong in the afternoon. Expected it to continue higher. Was looking for potentially a test of 4,200 for it to float higher and come back in, and it ended up pushing to 41.89. This is the high right there, 41.89. So let's take a look at a different way, a different angle on this. Before the open, right in here, we got that Microsoft news right at the beginning of yesterday's Trader Bite. Microsoft coming in and softening its expectations, or its outlook, I guess. And we end up selling off, and the expectation is we would take out that overnight low. But this action right here, wow, that was a tough trade. All the way to the point I managed to pull some points out of it, but on scalps. But those of you in Convergent heard me or saw what I was saying in the Head Trader channel. that it is really the type of action where it's easy to get whipsawed and to take a lot of breaks. But I think I made some money on the short side. I don't remember. And then once we took out this high that we put in on this crazy push, 4108. And if you recall yesterday, I talked about 4110, 4110. And what we did is we broke higher to 4110, then we pulled back to 4110 to set up a long on a break of the chop zone, this box right here. And that was the trade to have. The secondary spot to get in was much, much farther up. Right here, a pullback in the direction of the trend. And it pushed a lot farther than I expected. 41.47 was the key over-under magnet for the session. This is the MC point of control, the composite point of control, big area, and we have fallen below it this morning. But 41.47 is just a big area that we're likely to chop around in, and we chopped around in it right here. Built a nice high volume node as expected. High volume node as expected, and then we continue to push higher. We continue to consolidate and push and consolidate and push and consolidate and push. By the way, those of you who who are part of Convergent and didn't attend the study hall on active trade management, I go over this particular trade right here, the long trade, and how and why there was no reason to close the long. If you were in it, there's no reason to close the long by looking at rotations alone. I think this is one that you don't want to miss. If you're a member, please find it. You should have been emailed that recording yesterday. Please listen to it. I think you might find it's very useful, very applicable, or actionable information. So here we are. We settled at 41.75. We continued to 41.89, pulled back to the settlement right there, and then fell. And what we have is a market that is really having a hard time holding on to higher prices. So we're back inside of yesterday's day range. The overnight session is a multi-distribution profile, and we are likely to push back into that multi-day distribution. So we are back in this zone here. So what am I expecting? If we rallied yesterday and we finished strong on the rally, we finished right at the high. I mean, look at that little orange triangle there on the profile. And then we complete it by finding the sellers at 41.89, and we flow back, and here we are at 41.33, right below the 41.47. What do you expect coming into today's session? Look at where we've been the last few days. Look at the context of the last few days. What do you expect now that the non-farm payroll is done? I'm not only talking about today's session. I'm not talking about the big picture push to 42.20 and potentially 43.34 above. But for today, what are we looking at coming in? Come on. Hopefully you picked up the process here. We have finished strong. We have tested higher. We found sellers at 89. And we are currently trading down here. Non-farm payrolls behind us, and look at where we are. What do we expect today? We expect, and I'll give you the answer because you guys are all over the place. We expect this to continue lower, but overall, because of where we are, we expect this to be a very choppy day. We're opening in range inside of a multi-distribution profile. We have found our sellers up top. We have put in the we've gotten our non-farm payrolls number right here. We have tried to pull back to the mid, could not. We have pushed the low, so it's weak. And then so we expect it to just push deeper into that multi-day balance that's down here. And we are on top of, as you saw on the other chart, we are on top of this high volume area, and we have this CVPOC, composite point of control. This is just a recipe for chop. It's a Friday. It is a summer Friday. Just expect it to be just a chop fest. Expect people to get slaughtered this morning, trying to catch some sort of a trend that they may have missed yesterday. Look for people trying to trade the pullback from yesterday to get long. Those who missed the rally and have a bullish lean, maybe perma bulls. But I expect it to be awfully choppy this morning. Okay, so if you look at the active chart, you can see how it's shaped, right? So we have chopped around yesterday. We chopped around quite a bit yesterday. So this is yesterday's open right here. This is the open. This is the break. This is that trade at 41.10, okay? And then we pushed into 41.21 to 41.35. This is an important zone. We're coming into the 41.35. We are in a chop zone here. This is likely to be, we're taking some of this back. This is likely to be choppy. I'm going to be watching very carefully this 25 to 21 area, the 35 to 30 area from the last few days. For those of you who have been trading actively, you know that these areas have been very key. And then the 41.10 as a reaction area as well. So I expect a reaction here at 21 to 25. I expect a reaction here at about 35 to 30, 35 to 30 right there. And then I expect a reaction right here at 41.10, 41.08. So those are all areas to take a quick scalp long, quick scalp long, quick scalp long as it drops. And it also creates areas to trade against on the short side. On the short side, a push, a weak push against 35 is a short. A weak push once we break through the 25, a weak pullback to the 25 from below sets up a short. Targeting 41.10, the initial test of 41.10 sets up a short time frame long, and then if we break below, then a pullback from below to 41.08 sets up a short, and in that case, the short would take us back into the high volume node from yesterday, which was around 40.90. 40.90, 41.10 to 40.90 right here. This stock zone would be the target. So it's likely to be choppy, but it's likely to set up these very short-term scalps, mainly order flow-based scalps or price structure-based scalps. Not price structure, but price action-based scalps. But if you're not someone who does well in chop, please stay out of this. At least wait for the first half hour. The day is going to be long. Wait for the first half hour and then pop in. Not going to draw any lines on the chart today. I don't have much more to say other than it is that kind of Friday where I ask you to put in where you're located. Just type in your city, state / province, country. Where are you located? And if you would like to be contacted by those around you, include your Twitter or Instagram handle. Please do not type in your email address or phone number because, this is public. The chat log is public, and bots will come in, farm it, and bother the heck out of you. So if you want to get contacted, simply share your Twitter handle. If you're in London, and you wouldn't mind going out for some drinks with some fellow trader, put in your handle, and hopefully somebody will scroll through and make that connection. Please don't post your emails or phone numbers. Okay? And I want to leave you with one more thing as you're typing where you're from, and it's truly a very, very diverse crowd that comes into the Trader Bite every day. It's viewed by about 2,200 people every day between the different media, about 12 to 1,600 on YouTube, and then Twitter, and others, and Facebook, and so on. I want to leave you with this thought here, a little trader wisdom. Trade wisdom. Focus on incremental gains. I know everybody wants to come in here and catch the high and trade it down to the low, and then catch the low and trade it to the high. This is not the name of the game, okay? It is really about coming in and following and really testing out your process. It's really important to focus on just getting better in a weak area, and then finding the next weak area and getting better at that. Then finding the next weak area and getting better at that. This is what it's about. So don't focus on how can I start trading 20 lots. Focus on trading that 2 or 3 lot exceptionally well, so you can go to a 4 lot once you've accumulated enough to cover the additional margin, and then go to the 5 lot from there, and go to the 6 lot from there. You're here every day. You're in the market every day to make incremental small gains. And it's not gains in your P&L. It's gains in your confidence, which can only come from following and trusting a process, so you can start trusting yourself and gaining emotional capital, so that the market becomes less of a threatening body to you. The market's not here to take your money. The market's here to match up buyers and sellers. So all of that BS about predatory stop hunting algos, nobody cares about your stop, really, unless you're someone who's carrying a huge position. Nobody cares about your stop. Really, you're just looking to manage trades exceptionally well and trust yourself. Trust yourself in executing your plan. That's what counts. This is why you have blowups. You might make $5,000 in the last month and then blow it all away in one day. It's because at the end of the day, you didn't really trust. You can't really trust that you'll do the right thing and stop. Okay? Good luck, and I'll catch you on Monday morning. Take care and have a great weekend.